China may stop NFT trading. In 2021, the NFT market skyrocketed. According to the report of Chainalysis, a Singapore-based blockchain data platform, they have recorded $106 million in 2020, growing to $44.2 billion in 2021. The value of non-fungible token investment has grown as a means to access fans via the introduction of celebrities like Amitabh Bachhan and Salman. Celebrities' endorsement led to an increase in digital asset popularity in India. As we know, NFTs are digital assets that use blockchain to prove ownership of items such as images, videos, and other collectibles. It allows individuals to demonstrate that they have ownership. Additionally, NFTs provide data storage on blockchains such as Ethereum and Solana. This digital asset has attracted a lot of nationalities around the world until users found its pros and cons. While traders in the US worry about their tax responsibilities for selling big-ticket digital assets, their peers in China are faced with a very different problem. The Chinese NFT industry is headed to a future where those tokens can no longer be traded at all. Luckily for you, Nugget lover, we've prepared all the information you need to know about why China may stop NFT trading. On April 13, three influential national organizations in the financial industry in China released a joint statement on how to approach NFTs. This meant that they collectively cover almost all Chinese banks, brokerages, and fintech companies. They released a statement on how NFTs, a one-of-a-kind digital asset that store ownership and copyright information on a blockchain. To prevent financial risk, the following measures were given to members. First, they were asked not to offer centralized trading platforms for NFTs. Second, to refrain from investing directly or indirectly in NFTs. And third, to forbid using cryptocurrencies like Bitcoin or Ethereum in buying or selling them. The initiative will be designed to make it more difficult to trade NFTs, and it will be impossible to speculate on them. Ultimately, the shifting political environment surrounding NFTs may help determine whether they are intrinsically worth anything at all. In the United States, most NFTs are minted on the Ethereum blockchain and traded in Ether. They have become one of the most popular cryptocurrency investments in recent years. But in China, where cryptocurrency trading and mining are banned, NFTs have managed to stay away from crypto. Instead of hosting on public blockchains, major tech companies like Alibaba and Tencent have their own NFT marketplaces. Popular brands like Audi and McDonald's, which release NFT offerings to Chinese consumers with the hope of riding the bandwagon, did not host them on public blockchains. There has up until now been a sense of uncertainty in this industry even though it's young. As with all new technology that doesn't fit into traditional regulatory frameworks, the countdown has started early for when the Chinese government will step in. Since 2017, China has maintained a hard stance against crypto, unheard of around the world. The Chinese financial and cyber regulators have not yet outright banned the trading of NFTs, but their silence casts a long shadow over the business. While this is not the official word from the Chinese government, it's an important statement. While these joint pledges don't have any legal effect, they are somewhat binding to the members of these three associations, says JC in Shanghai. Given the fact that the state is reviewing its move, all NFT players are trying to stay on guard. For example, platforms developed by tech companies in China don't refer to the term NFT anywhere. Instead, these companies call them digital collectibles. This ensures that the idea behind categorizing them as digital collectibles is similar to Funko Pop toys or vinyl collections, with the major difference that they are being held on private company-owned blockchains that are not transparent to the public. They have to be bought with government-issued currency, and reselling is not allowed. In December, Alibaba released its Jingtan App, where they release NFT trades every day. They can sell off 10,000 limited edition items or art pieces by renowned digital native artists and sell their product at $5 each. Buyers have to act instantly and click quickly to secure their purchase, though it doesn't cost much. After purchasing the currency, it needs to be gifted for 6 months before it can be resold for no more than the original price, where another user needs to wait 2 years before gifting the same product again. Last year, Alibaba banned its second-hand marketplace from listing any products on the NFT platform, so they were never able to become a good investment and had no value outside of the company's platform. With the rise of NFTs, it wasn't that surprising to see these cryptocurrency scams and fraud. In group chats on social media apps, people discuss their NFT collections and effectively form an NFT black market. A Quora-like platform Zhihu user documented how he lost about $640 after scammers promised to sell him a set of NFTs but never did. In February, Jingtan claimed that they punished 56 individuals who were caught gifting NFTs to other people in exchange for revenues on other platforms. The company said it's vehemently against any form of resale of digital collectibles, so it partnered with tech companies to release an industry self-discipline pact, which addressed all the risk associated with NFTs without mentioning the word once. The fans of the original NFT model are disappointed that digital collectibles have led to a divergence from the original model. The creator of NFT project Supernova, an online project by Jingtan, says if you purchase a physical artwork, even though you know you probably won't sell it and no one is offering to buy it for now, it still has its value because there's an opportunity that someone will buy it in the future. Jingtan is his online alias. He refused to provide his real name for this story. Once it's decided that there's no secondary market and there's not even the channel to give them away, the NFTs basically will lose all their value, Jin says. A collection of 10,000 avatars, which are his own artworks, released in March, are sold through the American platform OpenSea, which has limited access to China. He's also listed them on Bigverse, a Chinese indie NFT marketplace formerly named NFTCN. Until now, these smaller marketplaces have been more adventurous about allowing users to trade and profit from their collections. Bigverse claims to be the largest and most active digital art marketplace in China. It uses Ethereum to mint the NFTs and allows NFT trading. Sadly, NFT's booming market began falling in just a couple of years. Did you know that even in China, popular cellular app WeChat has suspended some accounts that were involved in non-fungible tokens to avoid speculation on digital assets? Some accounts identified as promoting NFT market speculation are said to be rectified by the platform. This can result in driving up prices. There's no law regulating the trading on NFTs in China, although the use of digital currencies was banned last year. NFTs can be bought and sold in China like any other piece of property. For this reason, these type of items are known as virtual collectibles as they carry no physical form. Experts have warned about potential risk in the market that lacks current regulations. WeChat responded to local media reports that the accounts had been banned. The platform announced that it had recently standardized and rectified public accounts and small programs for speculation and secondary sales of digital collections. It added that this was done according to relevant national regulations in order to prevent the risk of speculation in virtual currency transactions. Tencent, a giant Chinese technology which owns WeChat, declined to comment further when approached by the BBC. The move comes as China's technology industry has come under critical observation by authorities. Since last year, the sector has been more official action against it than ever before, with crackdowns on major firms such as e-commerce websites, social media platforms, gaming companies, cloud computing providers, ride-hailing apps, and cryptocurrency miners and exchanges. Even with all these regulations, NFTs are still not illegal in China. It's not surprising as they are built on technology that is regulated by Beijing. According to the rules, buyers must purchase NFTs in the local currency yuan. They cannot use cryptocurrencies which have been banned by this agreement. The one-of-a-kind digital assets are selling for thousands and even millions of dollars. Although the growth of NFTs is globally significant, in the US, First Lady Melania Trump has tried her luck with the trend. Big brands like Nike and Adidas have also jumped on board of this. While the scope and market for non-fungible tokens is growing, so too is crime. The Chainalysis report noted that $8.6 billion worth of cryptocurrency-based money laundering took place in 2021, most of which came from sanctioned cryptocurrency businesses. Money laundering, and in particular, transfers from sanctioned cryptocurrency businesses, represents a large risk to building trust in NFTs and should be monitored more closely by marketplaces, regulators, and law enforcement, the report states. Gaurav Mehta, founder of KDAX, an online crypto tax and auditing platform, said NFTs are subject to abuse and they encourage criminal behavior, Whether it's money laundering, cheating, or scamming, due diligence on several parameters such as team, topic, and trade insights might reveal red flags for NFT collectors. Coming from the same report, it says that the value sent to NFT marketplaces by illicit addresses jumped significantly in the third quarter of 2021, crossing $1 million worth of cryptocurrency. Meanwhile, in the fourth quarter, topping out at just under $1.4 million, the report saw roughly $284,000 worth of cryptocurrency sent to NFT marketplaces from such addresses. Some NFT traders have been deceiving investors by wash trading the assets, according to the report. Wash trading happens when a trader is involved in both selling and buying the same asset, leading investors to believe its value and liquidity. According to a recent study done by Chainalysis, they have identified 262 users who are selling digital assets to themselves 25 times or more and found that it was not 100% sure if these transactions were intended for cryptocurrency wash trading. They have found that the 25 transaction threshold gave them a higher degree of confidence that these people were habitual cryptocurrency wash traders. Now that we found out why NFTs are being stopped in China, are you still gonna get involved in NFTs? If yes, let us know in the comment section why, as well if your answer is no. We're more interested to know your thoughts. That's it for this video, Nugget Lover. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember that you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!